Gold to resume is possible downturn. Good morning. Gold to resume is possible downturn. This is yesterday news, CPI news that came up and it disrupted the, because it was a boost to US dollar. So CPI was a boost to US dollar. It came up as higher than expected. So gold was moving in opposite of US dollar, right? So, but later on we have when this thing has been filled. That's why I told you the importance of that liquidity gap being filled downward. Then you see the opposite move. That's AMD for you. When a particular liquid has been taken out, price usually move in the opposite. This place has been filled. The previous liquidity zone has been filled. So gold move in opposite. So right now we are seeing gold moving in a new downturn. In a new downturn, this is the liquidity, the trend line being broken, right? Then liquidity is going to take liquidity downward, right? So that means we having something like this is the opening price for today. Opening price for today is here. We have this as opening price. This place as opening price, right? And let me take this place out. Take this place out. So let's take this place out to see how price moves from the opening price, the position of price. That's why I'm saying possibly there's going to be a decline in gold. So price rightly opens here for today. This was yesterday price. This is today, right? It opens, then you can see a push higher to clear out this in order to feed up the liquidity void. Then and if you look back, there's a reference. If you reference it backward, you see that this is an important this thing zone, supply zone, important supply zone, or intermediate supply zone, or other blocks there. So this gold we get into after clearing out this, and then you start seeing a move from there. Price will start declining downward to fill the liquidity void downward in order to make an efficient price, then move a little bit higher, then push down again. But we on a higher time frame, I normally tell the buyers of gold is still down on a higher time frame. If you go to weekly chart or daily chart, you got that. Right, let's quickly close this subject. So this is how it moves. It moves this morning. So the upside has been cleared. So I think it got to the zone. So there's going to be a price rejection there. So after this, what you're going to see is going to be down. You can see that. So this will give you an assurance that you must have got this foreknowledge before now that once price move above the opening range, you're going to sell it the opposite. Then, but there's a kind of filter you're going to use. You can use your flip zone. You can use your retest to the opening price. Yeah, normally so that like what happens here. See, this is 11. This is 10. 11 price opens here. You see, price move to the below the opening price, then finally move higher. That's on Wednesday, right? So if you come here, you see that price move opens here. This is 10. This is 9. This is 10. It opens here and it got retested, moves higher. Then it finally moves down. Can you see that? So you can use that's price manipulation in gold. That price is highly consistent. Price manipulation. This is 9. This is 8. This is 8. This is 9. Price opens here. Can you see a retest of it? Then moves down. It moves down. So that is the same thing that is happening right now. Same thing that is happening right now. Price move, it opens here, move above it, then it will move into the opposite. That is just the simple this thing. Use your, you can use your this thing, your SH, this SH. Then we are looking for a BMS. This is a kind of BMS. Then move it to it. Then it's supposed to be selling. Yeah, price will still be selling down. So our likelihood is that price will continue selling. So having something, put your stop loss above here, your stop loss here. So guys, we ought to be. This is right. So try to create a kind of this. It can still be a push, but you just push your stop loss here. Then your next target will be what? Will be here. Yeah. So that's what we are having there. It's almost about how many pips there, how many pips, how many risks. Look at our almost about 36 pip risk. So you can just go to your 1 minute chart and see a refinement in your 1 minute chart. And, you know. So that's probably going to be it is in right now. It's coming down. It's coming down. But just put your this here. But it could still be a kind of a retest of this nature. But once you get this, it will give you more this. This is now an early entry signal. But you can use wait for your London open to enter, because that is when the liquidity will come into the market when London opens. But for aggressive entry, it could be now. Yeah, it could be now. Yeah, so we are getting that, and so that's what the right. We almost about how many pips down we are aiming here. We are targeting almost about to this place, but this liquidity void is going to be filled. So this we are targeting almost about 182 pips. Just take your 100 pips and you're okay. It's time once price gets here, take your 100 pips and you're out. Yeah. You're out. God bless you. So that is just the this on good.